the rally that we've seen in Japanese equities so far, do you think that's really justified by the fundamentals as well?
Absolutely. Yeah, everybody's making a big deal, and I think it is a big deal that Japan is finally surpassing its 1989 high. Remember, the S&P is up 14.5 times since 1989, and Japan is just beginning to get there. Japan last time was bought back in 1989, are very expensive, but Japan, I think, remains a moderate valuations, and on the micro level, where we're engaged, we're seeing enormous amount of corporate activity to improve profitability. And actually, across the board in Japan, companies are producing more operating profits than ever before. So yes, I remain very bullish.
I mean, and of course, producing better profits really tracks back to what you've been doing for years, which is putting pressure on Japanese companies to radically change the way that they operate. So where do you think we're at in terms of the corporate structural change governance reform process?
Okay, I think we're only mid innings. There's an enormous amount of that left to do. There's a lot of left to do in terms of independent directors doing a continued better job and holding management accountable. And in terms of protecting minority shareholders, there's enormous more to do in terms of M&A in Japan across the board that's going to increase margins. There's a lot of still levers they can pull to improve profitability.
When you say we're at the midpoint, what are the sorts? Are you looking at? Is it looking at sort of proposing more difficult changes that you want companies to attack or enact, or is it looking at different industries? Is it scaling up the size of the corporation? What is it that specifically tells you we're at the midpoint?
There's actually just simply a ton to do. There's a ton of M&A that's left to be done. There hasn't been any hostile M&A in Japan almost since the 80s. And so there's a lot of consolidation across Japanese sectors. I'm not talking about foreigners, I'm talking about Japanese corporates with Japanese corporates. I'm talking about within industry sectors. As in the US and in Europe, we have 2 or 3 leading companies that produce better products, that produce a wider array of products and cheaper prices to customers. You just haven't had that in Japan. And so there's a lot of leverage to increase margins in all these companies by executing in terms of just having 2 or 3 or 4 companies that are going to be a leader in all these different sectors across the board. That's actually an extraordinarily important and easy lever to pull. There remains to be geographic expansion, and remains to be actually in a lot of companies we're engaging with, and I think you'd be a lot better management. They can go ahead and figure out how to increase increase marketing, to increase globally, to improve profitability, but also just improve revenue. So a lot of these companies have not been fantastically run for a long period of time, and that's where these nomination committees need to do a better job of going ahead and making sure they're appointing the best in management. Japan still has a nepotism problem in many companies, where they still continue to appoint the chairman's son to executive offices, and that's one place in particular where I think independent directors can do a better job of making sure we're getting the best of management for these companies so they can be world-leading companies.
As you say, it's been a long time, like it's been, over a decade in the making. And as you say, there's also been a lot of different elements of that, the name and shame kind of campaign, clearly the rise of activist investors as well. How much do you also think that this rally has been driven by the fact that investors have been fleeing China? I mean, Japan's corporate governance certainly looks a lot more advanced in the process when it comes to Chinese companies.
There's no doubt that a lot of Asian investors in particular started looking at Japan as opposed to China. But I think this is actually systematic work that Japan has done over the last over 10 years now in terms of improving corporate governance, getting shareholders to be more engaged with companies, pushing companies to go ahead and improve their ROEs, pushing them to improve their price-to-book ratios, pushing them to improve profitability. And so I think there's actually credit goes to Japan, much more so than simply some investors fleeing China for lack of clarity in terms of the macro situation in China.
How much does the Bank of Japan, when they eventually pull the trigger on policy normalization, the impact of that subsequently on asset classes like the yen, does that make a difference in terms of the trajectory of this broader rally?
There's no doubt that extraordinary low and negative rates have been very helpful for this, and credit to Japan as well for being extraordinarily disciplined and not changing rates, not raising rates. but the numbers that we just heard as well in terms of inflation are extraordinarily moderate. I think that yes, it'll be epic making when we actually finally get out of deflation. But these are, I think, the moves by the Bank of Japan, I hope remain moderate, and I hope from a taxation point of view remain extraordinarily moderate. And so we can continue to see this rally, but you also continue to see these improvements by Japanese corporates.
Seth, what companies are on your radar at the moment? What have you been building positions in, and what are you targeting right now?
We are engaged with kind of the meat of what I would call corporate Japan, in terms of companies that are both, a lot of companies that are consumer-facing businesses. We're involved in an enormous amount of both businesses that run retail outlets, run retail stores, sell retail products. We're involved in actually some other parts of the industrial homeland in Japan that are producing in auto manufacturers and a whole host of companies they think have a lot of margin improvements to be done. So there is no end of companies that I think can continue to dramatically improve.
I'm curious, Seth, about the reception that you're getting, because you mentioned this nepotism problem. That makes me think perhaps sometimes it might be the case that management at a company isn't that receptive to the changes you're trying to make. But since the Tokyo Stock Exchange really started to focus on corporate governance reform, have you seen a sort of changing attitude around it in the companies that you're working with?
We've seen enormous, yes. The sea change we've seen over the last 10, 11 years in terms of since Abenomics kicked off is dramatic. Right? We've seen it in terms of companies stating publicly about their price-to-book ratios, stating publicly about their ROE targets, stating publicly about their improvements, adding enormous amount of diversity to their boards, adding enormous amount of independent directors to their boards. So there's a sea change across the board. There's still a lot more to be done. Now that companies have nomination committees, our agenda with a lot of companies that nomination committees need to do their work. They need to function. And to function properly, yes, they need to go ahead and try to find the best of management. So nepotism has gone down over the last 10 years in Japan, but I still think the 352 companies or so that continue to have the son of the chairman, the son of the president, who now becomes the next president. I think that's one example of actually how much more management can generally improve. And because they should go out and find the best of management, not just because you happen to have the right father.